All right, let's connect then with Dipan Mehta, who's joining in right here on the show to share his outlook on the markets. And Dipan, something that we've been debating for quite some time now. If you look at the year-to-date move on the frontline index or even the Nifty Bank, it's done precious littles, but it's been the mid caps and the small caps that have shown you very stellar returns. Just going back in history as to what this trend has really proved in the markets before, or your assessment and reading, what is this trend indicative of?
Good morning, and thank you for having me on your show. I think this is part and parcel of a multi-year bull market, and we typically see this phenomena play out that first the large cap stocks make the move, the Sensex Nifty first make the first move upwards, and then a lot of catch-up is being done by small mid-cap stocks, and that's what's playing out over here. At some point, you'll see a correction in the small mid-cap stocks, and then the large cap stocks will start to move up. I think that point will be reached when we see significant FI inflows, because even as we speak, the daily FI numbers are negative. So it's only when allocations increase and more money is pumped into the large cap sort of index stocks is when we will see the large cap spectrum also move up. But for the time being, I think it's a great trend. And what we're observing is that a lot of portfolios are doing very well for investors. And I think investors who had conviction in equities, who have stayed with their SIPs and invested in stocks last 2-3 years, they've all been rewarded with handsome returns. And that certainly, I think, means the more and more money will come to the equity market over the longer term at the expense of other financial assets. So it's a very good trend. And I know a lot of mid-cap stocks may have become expensive on a trading 12-month or FY24 basis. And of course, there could be a correction at any point of time. But broadly, I think the underlying fundamentals of the Indian economy and the corporate earnings remains quite sound. And we are in a nice, I would say, a virtuous circle where sector after sector is doing well and pulling up even some of the sectors which are not doing well.
Sure. Let's look at sectors which are doing well. And let's just reiterate that note by CLSA on this power sector, saying that power demand has clearly spiked as El Nino strikes. It's been the driest August that one has seen in the last 22 years, which is clearly driving demand. Having said that, Dipan, most of these power stocks have already been running up quite a fair bit. There's NTPC, NHPC, which is clearly finding favor in the market because they are like, the regulated utility, so to speak. But do you think, can one enter into the power stocks now and still make money? And B, if that be the case, what's your preferred list?
See, generally, we don't prefer utilities like power companies because our preference is clearly for growth companies. And there's a lot of action in electronic companies, or basically companies which supply to the power industry or the energy industry, be it transmission or even power generation. I mean, you see the numbers which come through from MNCs like ABB, Siemens, which are critical in that sector. They have done phenomenally well. They're expensive, no doubt, but look at the order book position which is shaping up over there. And then there are the transmission equipment manufacturing installation companies, likes of KEC International, Kalpataru Power. They also have been reflecting very good numbers. And last year, I think even BHEL has started doing very well and looking at kind of a 3-year type of order book position, which is all because of increased capacity being set up for power generation. And there's a dark horse like a Suzlon or a Inox Wind, which is bang in the middle of this renewable energy space. So there are many other stocks, I would say, which are engaged in setting up power plants or setting up transmission lines, where we feel the prospects are far better, far more visible and available at reasonable valuations as compared to buying into a power utility company.
What's the sense that you're getting, Dipan, when it comes to the entire underperformance of some of the marquee large cap names like a Kotak or an HDFC Bank, which has obviously led to pretty negligible returns for the Nifty Bank as well for the last 6 to 8 months?
I think it's a matter of time. These stocks will start to perform, and within a month, you may see them go up by anywhere from 15 to 40% as well. It's just that right now the money is flowing into small mid-cap stocks. We are seeing a lot of inflows into the mutual funds which buy these small mid-cap companies as well as PMSs. So that's where the fund is moving in. But a point of time will come when foreign money will come in droves, and that will go to the Kotaks and the HDFC Bank and the Reliances. And that's when these stocks will start to move up. You have to understand that there's only so much that the small mid-cap stocks can move up. end of the day, they take their valuation base from the large cap stocks. So unless you don't have large cap stocks starting to move up, you cannot have mid cap stocks being traded at such a high premium and such a huge gap compared to the large cap stocks. So it's a matter of time. And actually, strategically speaking, if you have a trading mindset, then fresh money should be deployed in the large cap index stocks. Maybe trim some positions in the mid cap counters as well as a measure of safety.